Jeffrey, welcome back to San Francisco. This week, President Trump, Saudi Arabia, half of Silicon Valley's leadership was there, and people were not expecting that. What's your take on that? I mean, back to still Saudi being a little bit mysterious in the Middle East region for those of us in Silicon Valley. What's your take on what's happening?
Well, I spend a lot of time offshore. I have most of my life now. Maybe not more than half now. Before that, it was a good 25-30% of my time offshore. So I'm kind of familiar with politics and enterprise in the Middle East and Europe. So I'm not surprised. I don't think they're that mysterious over there in UAE. I mean, they're, diplomatic. It's a trading center of the world, always has been. God gave them a bunch of mineral wealth not so many years ago. But what I always tell my friends over there, I said, well, that's nice. So what do you do when you have all that wealth? Well, we buy a bunch of houses, buy some really big boats. Then years go by, you still have all that wealth. They go, what am I going to do? Buy another house, buy another boat? No, I think we'll just build a world power instead, which is what they're doing now. They say, we got the toys first, and then now we're going to build a whole world dominant economy and everything else.
Yeah, I think it's actually a forcing function. I just got back from a family office summit as well in the UAE, and a lot of talk about intergenerational wealth, but also how do you pass that down, but also what types of businesses to be in, because as you mentioned, historically, there's energy, there's oil, there's construction, there's development, there's real estate. And
I think what you're witnessing is real nation building, not like fake nation building by overturning the government and trying to duplicate it in some thing that matches something you care about. That's fake nation building. What you're looking at is real nation building, where you've got kind of enlightened government. And remember, my opinion, it doesn't matter what form of government you have, if you have bad leadership, you're going to have bad government. I think you've got good governance over there, and you've got benevolent governance for the people, and they want to build a world powerhouse, right? And so Trump goes over there, and what did he say? He says, well, U.S., we've got this biggest military in the world, right? Which is a mixed blessing. But we got the strongest economy in the world. But then what else did he say? But you know what? This is the center of the world.
It is?
Really the center. Economically, transportation hub, a gateway to Asia.
Yeah, you're 4 hours from some high density of the population. I know there's over 50% of the population within this circumference of the city in China, but 600 million young people under the age of 26 live in the Middle East and Africa.
It is a center, it's a hub, and then also historically it's been a, quote, mecca of like religious center, and cradle civilization's not too far down the road. You know what I mean? So it is historically that way, and I think it's the rebirth of that region as a real pivotal part of the global humanity.
And you, as trained as a macroeconomist, it's interesting that you have these insights. What do you think are some of the near-term 5-year outlook on some of the things that are happening?
Just not to leave that topic, remember they have a visa program, which is a particular sensitivity of mine. They have a visa program that makes sense, so you can go there and you can meet people from all over the world without a lot of visa hassle. That's a tremendous economic advantage. And then their banking system is still a little nascent, I think, but it'll get good. I think they're moving ahead pretty progressively in digital, but that's slow. So I think it's really, they're building themselves as a hub. So you talk about the next 5 years, I think if the premise is to nation build there, right? So you got the buildings going up fast, then you think they no longer want to be a wealth exporter, right? So they're looking for accretive investments that not only does it generate yield off their wealth, but it also builds their nation. And so that's why you're going to see reciprocal investment transactions. They're going to be looking to, what my experience with talking to investors and companies there, they're looking for investments that are accretive to the nation as well as economically beneficial to the people who have the wealth. So they want to do a deal with a company in the U.S. that's going to open a branch there. Yeah. Or they have certain industries that they want to develop in the region. They're going to be looking for co-invest in JVs that bring enterprise to the region. So they end up with a more diversified economy based on tourism, transportation, industrial, finance. They want a diversified economy rather than just mineral-based only.
Obviously, it's developing into a financial center. We've got places like EDGM and DIFC, and that's financial services. What's your take on how technology is going to actually proliferate in the kingdom? I mean, obviously we're in Silicon Valley. People are very interested in our technologies. How do you think their adoption of these technologies, especially as the barrier to entry is becoming lower?
Well, again, if you want a diversified economy, right, you look at where you think the growth is going to be. And technology, I think they're talking about probably chip manufacturing in the region. But that's just part of sovereign autonomy, right? You want in-country essential industries. You'd really like to have some level of self-sufficiency if you can, if you're wealthy enough and big enough. And they are, so they go in and want chip autonomy, right? And they probably won't have steel autonomy, right? Maybe it's not so much of an industrial country, although they do some. But chip autonomy, finance autonomy. I think there's a push for the film industry there. They want to be, especially since it's digitally based a lot now, there's no reason why they couldn't have a robust filmmaking industry there. I think they're quite interested in that. Some manufacturing, for sure, because they've got a really progressive immigration policy where they're happy to bring in workers, work visas and things like that to build the enterprises there.
Yeah, I'm being able to learn about their free zones, their business climate, and definitely the way you can onboard registering a business, getting a business visa. It's pretty progressive.
Yeah, pretty good. And as far as with the AI, and especially with government data use, there's an interesting concern about the politically active countries like the U.S. and China, for instance.
And Russia.
And to some extent, Russia. So some of our clients are not U.S. or Chinese. They have a little bit of an advantage because they're not part of a country that's politically aligned.
Yeah.
There's a lot of interest in having a little more neutral counterparties for sensitive information. You go to the U.S., you think the CIA is looking over your shoulder. You go to China, you think the CCP is looking at all your stuff. Are you wrong or not? Not me to say. I'm just saying with a perception, right?
And it doesn't help when, back to AI and the models that we build, even in a quote-unquote public setting, whether it's a U.S.-based model or Chinese-based model, you can see the actual biases that were built into them.
Well, there's that. So then now I've noticed some deals going on with like third-party countries that aren't as politically or espionage active. And they want to establish a foothold in the UAE because other mid-sized cities, Malaysia, Singapore, these other places, they also want less politically involved or sensitive involvement with data in these politically active countries.
Right.
So there's going to be a little pushback, a little bit of opportunities for more neutral players to get a lot of foothold. And that's why I have some clients that have set up there because they expect to do a lot of business in some of these emerging cities.
I agree. I mean, I think that is a natural extension of what's happening. Since you brought up Singapore, I wanted to shift gears and talk a little bit about what you see. I mean, there's a lot happening in the Middle East. How do you think places like Singapore are reacting, or do they need to worry about it?
Well, I mean, you were just in Singapore. We had an event there, right? What did you think?
Oh, what I thought was that a lot of people who have not yet been to the UAE and just thought that the UAE used Singapore as a template for how they're going to build. What I get a sense of is that in terms of fintech and financial services, the Singaporeans feel like they've got that. They feel like they still have quite an advantage over, say, the UAE in how they've developed things, like how there's regulations when we talk about digital assets, stuff like that. Singapore is still one of the places to go to get your MAS, to launch. I have friends who just got an $18 million round from PayPal Ventures for Americans who had their startup here but purposely did their treasury ops management AI software and launched it Singapore because they knew it'd be like less friction, less regulation compared to the U.S. So you could be a U.S. company as a client, you just can't do your cash management in the U.S.
Treasury ops management?
Yeah.
I've got a good source for treasury management for those guys.
All right.
Ex-PIMCO guys that run about 200 ETFs.
Yeah.
They actually manage the assets, or they have software for managing
Software
treasury?
for managing the assets.
Might have a plug-in for an asset manager plug-in for them for developing liquid strategies to get a little bit of yield off Treasury?
Yeah, so they bootstrapped 2.5 years ago. They got $2.5 million of their own money. They put their own personal finances in it. They got a $2.5 million angel round, and they just got $18 million led by PayPal Ventures. So
who do they use for? Would they have a source for the sub-advisors for the investment strategies?
yeah,
Singapore's an interesting place because from a digital and a banking standpoint, it's pretty good. And then we have a big client out of Japan that just moved their operations to Singapore, and their income deeply rooted in Japan, but the principals just moved to Singapore, and then we've been doing some financing for them on deals in London. So I think it's considered a good haven for capital outside your parent country. Hong Kong used to be, but I think that there's an interest in going to, again, a little more politically neutral domiciles to have wealth management and wealth.
Yeah, and I think it's using the baseball analogy, thinking that you can be an American company but start off in a country that has regulatory infrastructure but not oppressive regulatory infrastructure, test that out, and then move it back into the U.S. or the UK, something that is highly regulated.
There's look, you can't discount the politics from this stuff. And I have a lot of clients that's why we have offshore. I mean, we're affiliated, we're all linked together, the U.S. and offshore. But we have silos of non-U.S. activities that aren't really subject to the SEC or U.S. government regulation. Now we're subject to global AML KYC because we don't create these things to be able to deal with bad actors. We don't deal with bad actors. So we use a global, all jurisdictions, whether it's UAE, US, UN, Europe, or whatever, for AML KYC. But there are a lot of clients that would like to keep their transactions out of the U.S.
Yeah.
And we have a vehicle for that. We can deal with you with a U.S. kind of brand and U.S. ethos, let's say, but without the oversight of the U.S. government for your transactions. So you get the best of both worlds.
Oh yeah, coming from banking, we used to call it pernicious compliance in terms of dealing with the up to 20 regulators in an OCC-controlled SIFI. So definitely, it's a lot less. If you're thinking about a technology startup, a fintech, trying to get your sea legs, it is very oppressive and expensive to fully onboard in the United States. So definitely.
Well, I'm not. It's a lot of times it's perception rather than reality. Sometimes there's a perception of risk in the U.S. from either, because sanctions. Although if you're sanctioned, we can't deal with you. But new sanctions going on, and there's some perception, a little bit of risk of overreach by U.S. government. And if you have that perception, well, we can deal with it. Now, I'm less concerned about it. I think sometimes the perception of the concern exceeds the risk. But they're clients, if they have a bias one way or the other, it's up to us to deal with it within a regulated environment. And so we can. So if you're worried about it, well, we'll mitigate that risk for you. It's all right. You're entitled to your opinion. We're a service provider, and we'll cater to that opinion.
And I think that's where what we call risk appetite is important, because when it comes to back to technology startups, if you're entering a large bank, you are going to be subject to a large bank's risk management, and that has to do with risk appetite. Even if you're very little risk, the process to go through the risk management takes a long time.
Right, and what happens is your transaction is so small compared to the value of the bank that they'll just default on the side of zero risk. If it just has the whiff of risk, the slight perfume of risk, forget it. Why bother?
Right.
There's no benefit to us to take that. We're just going to take straight down the road vanilla.
Yeah.
Now, if you're a massive client, we'll take a close look at it maybe, and we'll realize that whiff of risk is no risk, and we'll do it. But if you're small, we're not going to bother to look at it. It has the whiff of risk, forget it.
Exactly.
And so that's where you get. So you deal with middle market group like us, and you're a valuable client to us. So we'll look under the hood carefully and make, there's no risk here. We're okay. And the banks in our accounts and things like that, and our own accounts, that can deal great with international trade and FX and stuff like that. So we can serve those guys. But back to your original thesis here, you got Trump showing up in the UAE, right? He's a good guest because he really praises the host. But I mean, you got MBS meeting him on the tarmac, for goodness sakes. That's
You got the Qataris giving the F-15 escort.
Escort, gave him an airplane, another $1 or $1.5 trillion of business. So they want to do business globally. They don't prefer the U.S. And they want to do business with China and everybody else. But it's like Switzerland or the Middle East. They want to do politely deal with everybody. I think what's going to happen, or what's happening already, is the big boys are over there doing deals. Well, we're not big boys, we're middle market. But there's a massive amount of middle market transactions that are going to follow the mood of the big boys. So you got these, a lot of family office, $25, $100 million family office. They're not writing $250 million checks, obviously, right?
Right.
They want to do $5, $10 million checks, but they're going to be looking to diversify their portfolio offshore, and then those are our customers. So they're going to look at investments in the U.S. or buying businesses in the U.S. so they can do more trade. We did a deal in England for a group out of Saudi. They had an exit out of a packaging company in Saudi, right? So they are also connected in the construction industry. So they wanted to buy a construction materials company in the UK because once they had secured the supply chain for construction materials, they had the distribution rights, they were connected to the industry in Saudi, then they could import those construction materials into Saudi.
Right.
So you're going to see a lot of deals like that are accretive. So we'll buy the company here. They're doing okay, but Europe a little bit stagnant. But we'll use what they have in our region and really grow. So that was a pretty typical transaction. We provided financing for that deal.
Yeah.
There'll be more of those. There'll be more acquisitions. We did another one in the U.S. It was a Spanish aluminum manufacturer. And they wanted to buy a U.S. company that made aluminum because of the trade things, people now want footprints in other countries so you can easily do trade with less tariff problems. So there'll be a lot. I expect a lot of M&A in the U.S. from offshore companies that want to get a footprint here so that they can use their technology here and avoid potential tariff issues.
Yeah, and Jeff, I thank you so much for your insight. I mean, I think as we look at regions, we talked about Singapore, we talked about the UAE, that there's going to continue to be innovation in how the markets develop. As you mentioned, they're really trying to become a global leader in trade and commerce. So I think that these deals will continue to proliferate.
That's right, and a lot of international companies are setting up headquarters in the region.
Yeah.
International African companies set up headquarters and back offices in DIFC and Dubai, and to some extent on the financial side to Abu Dhabi.
All right. Well, Jeffrey, thanks a lot for taking the time, sharing your wisdom with us. Always appreciate it.
Yeah, thanks, Keith.